So over the past 1 week, we have seen some selling pressure coming back in the US technology sector, and of course in the Singapore market, we have the tech sector, suffering from some sell-off as well, right? So in today's video, we're going to look at these 3 technology stocks, and this is like AEM, Frencken and UMS. So these are stocks which I've talked about in previous video. They come like push up a bit and a bit of profit taking came back, and right now we're seeing a bit of weakness coming back. So we look at the stocks again in terms of the chart to see where they can potentially head to, or before some bargain hunting can come back again. Hey guys, Joey here, top tier remisier in Phillip Securities and chief trainer at Trading Impossible, right? So do stick around all the way to the end of this video because we're going to look at 3 Singapore technology counters today, alright, and it is AEM, Frencken and UMS. So these are the 3 stocks which I got a lot of questions from clients as well as the public, alright, regarding the 3 technology stocks. If it's like, is it time to buy, is it time to get in, or should we wait, or should we just get out and cut loss and all that, right? So let's take a look at the charts to see what it says in terms of the trend. Is it still good to go, right? And maybe it's time to kind of like enter again once it hits certain levels, right? So this is AEM over here, currently trading at about $4.01. So we have kind of covered like AEM just previously somewhere in like December, January, right? It kind of broke above that like 375 level, went up to like $4, broke up and went all the way to around that 475, and that's where some profit taking came back, right? So over the past few days, look at this, right? Over the past few days, we kind of broke that $4.30, 440, kind of broke down as well, and we are pretty much now back to this good psychological support level at that $4, right? So in terms of the trend, before I dive into where we are right now, let's take a look at the trend. So in terms of the trend, I think I mentioned previously that in terms of the uptrend in the longer term, it still looks quite good. Look at this, like the red line since like last year. Not just last year, even in like 2019, 2020, this red line 100 days moving average is like kind of like sloping upwards and kind of like above the 200 days moving average. So both of these lines are pointing up for now. Alright, but of course in the short term, we did see like a bit of a consolidation pushing up, consolidation pushing up, and now we are seeing some selling, right? So support for AEM would be at that $4 for now. In fact, today we kind of closed at about 4.01, and that's where we kind of rebounded from somewhere in January as well, just last month. Alright, so hopefully we do stay above that $4, and then that's where we can potentially see a rebound back to that 440 and of course back to that 475. But right now you can see it's only just 1 day, so it's hard to see if we can kind of like hold above that $4. But over the next few days, same thing, if we can see what we kind of like saw just last month, we kind of like supported above $4. If we kind of like hold at 405, 403, above that $4, that would be a good indication that this $4 support were to stay. Alright, so this is AEM, but I would say that right now you want to be careful if you want to enter, because we might still see weakness coming in from the US market in terms of the technology sell-off, and counters like AEM would be affected as well, and that's where we might see some more selling pressure. So if the $4 were to break down, we can actually see a bit more weakness coming in again, all the way to around that $3.75, maybe $3.80. That was when, I mentioned right over here, that was when we started to break up, and the uptrend really started in January, right? All the way from $3.80 to like $4.70. So next support after 4 would be around $3.80, and $3.80 would be quite a good support level. You can see it was previously the resistance level, kind of like kept down, went down. Imagine when we broke up, that's where the upside really started. So $3.80 would be, I would say, a better support if we do break below that $4 immediate support level that we are kind of like just hanging above right now. Is at 4.01, so that's just right above, but we need to see if we can really maintain above this support level over the next few days. Right? So if you're looking to kind of like enter on dips, I think it's good to wait to see a bit more stability and some of those good supports like the $3.80. If it like kind of like hover and kind of like approach that level, that would be a good level as well. Okay, so this is AEM. Short term, there might be some weakness coming back. Of course, in the long term, same thing. In the long term, we have been like pretty much like consolidating each time, consolidating. But in the long term, alright, it still looks good as long as it kind of holds above some of those longer term support level. In this case, after $3.80, that would be like probably the $3.30, $3.40 level. That was where we have been holding since last year, July. That would be good for the longer term uptrend to continue. But in terms of the short term, yes, we can see selling, alright, coming back in. hopefully we see good support coming from $3.80 to $4, and that's where we can see potentially a bit of bargain hunting coming back again right over here. So that's where the 100 days moving average is as well. Okay, it's 100 and 200 days moving average are right over here. So that's where, as we approach this level from $3.80 to $4, that's where some buying pressure can start to come back, right? So this is AEM right over here. We are currently trading at about 4.01. So guys, if you like this video, be sure to give me an early thumbs up. It will definitely help out this YouTube channel. Thank you very much for doing this. So this is Frencken here, currently trading at about $1.24. So you can see over the past 1 month, we've seen a bit of resistance at about the $1.45. So it was pretty much consolidating from like 135 to 145. You can see up, down. But then what happens over the past week, we broke that 135 and even that 130 support level gave way as well. So currently we are $1.24, right? So in terms of the shorter term, you can see we kind of went down below the 20 days moving average, and this 20 days moving average line, the green line, is kind of like sloping down now. So in terms of the short term, we might actually see a bit of short term weakness coming in, right? And the fact that we kind of broke that 135 level as well, right? So yeah, we might see a bit of short term weakness, but anything I would say as it approaches the level, like maybe about 120, look at this 120, let me go ahead to draw another support line. 120 would be another support level, a bit of a mid-term support. Let me just put this as green in color. You can see that this $1.20 level is where the 100 days moving average is right over here. So 120, that's where we can see a bit of bargain hunting coming back. You can see today we kind of like approached that level and buyers came back at the day end. We kind of rebounded and we kind of closed at about $1.24. So 120 would be, I would say, a bit of a support, all right, and the next support after $1.20 would be the $1.10. That would be, I would say, a stronger support. Look at this, $1.10. We were pretty much kept below since like last year, August, all right, August, September, all the way to like November, and that's when we broke that 110. The upside really started. So anything from, I would say, 110 to that 120, that's where we can potentially see a bit of a stability, a bit of rebound, buyers starting to come back again, and hopefully we rebound from these levels back to that $1.30. So if you're looking to kind of like get in on dips again, to kind of ride the longer term rebound or the longer term uptrend, those are the levels from 110 to 120 whereby you can potentially start to accumulate on dips to ride the rebound. Of course, you want to have a plan as well, because if the support level at 110 were to give way as well, that's where we can see a bit more selling. So make sure you have a plan to kind of like get out, all right, and do your proper position sizing. Don't just anyhow buy, all right. Make sure you have a plan so that if it does break some of those good support levels, you want to have a plan to kind of get out, to kind of cap your losses as well. All right, so this is Frencken. I hope you have taken note of some of the levels I've talked about in terms of the next support whereby we can see some buying coming back again. Okay, so let's take a look at the next Singapore technology stock that I'd like to talk about, and this is UMS right over here. So it's currently trading at about $1.24, right? So just back about a week back, since like January 20th of Jan all the way until like 22 of Feb. So it's about a month. It has been consolidating from like $1.30 to $1.40. So it's like a 10 cents range, 130 to 140. You can see up, down, it kind of headed towards that 140 level, and there were a lot of sellers there. I think I covered it previously as well. A lot of sellers. That's where we are seeing a major resistance level, and that's where some profit taking came back again. So that actually could be a good level. I mean, the fact that you couldn't like get past that level over like 2 weeks, 3 weeks, a month, it could be a good level to kind of like take some money off the table as well as we approach that $1.40 level, right? So what happened was it was pretty much moving sideways, and look at this, the green line, the 20 days moving average was like pointing up. That was when we kind of broke above that $1.10 level somewhere in like December. All right, and that's where the upside really began. The momentum started to happen fast, and it went from 110 all the way to like 140 in just like a matter of like 2 to 3 weeks, right? Then it started to consolidate, and while it was consolidating, you can see that this green line started to flatten out, kind of like flatten out a bit. Right, it was moving up, kind of flatten out, and right now you can see that this green line is like pointing down. So prices have like kind of crossed back down below the 20 days moving average. This green line is the 20 days moving average. So prices have kind of like crossed down below the 20 days moving average. So in terms of a short-term downside weakness, that can happen. And that's exactly what we're seeing when we broke that $1.30 support level. So yeah, when we broke the 130s, that's where sellers came back again fast, all right, and we're pretty much back to that 124 right now, right? So the next support, all right, look at this. Next support would be likely at the $1.20. Look at this, $1.20 was the previous high. We have seen somewhere in August, we touched, came down. So that would be a resistance turn support level. So let me just go ahead to draw some upside rebound targets from here. All right, that's where we can potentially see a bit of a bargain hunting or some buyers coming up, again, all right, those who want to accumulate on this. But more importantly, I want to share with you the next level, and this level would be, I would say, more important, right, after the 120 would be the $1.10. 110 is key. Look at this, 110, pretty much we were holding below since 2019, came down, all right, we kind of touched, went up above, came back down, and we're pretty much consolidating below the $1.10 level since like August. All these were consolidating, and when it broke that 110, as I mentioned just now, that was when the upside really started from 110 all the way to 140, like more than 25% upside in a matter of 3 weeks, right? So this 110 would be, I would say, a better or stronger support level if it does hit there. I mean, if that 120 were to break down, then yes, we might hit to 110, and that would be a stronger support, whereby I would say, buyers might really start to come back for those who are going in for the longer term to kind of ride the longer term uptrend. 110 could be a very, very good opportunity to kind of get in on dips, especially if you kind of like exited, you kind of take profit near that 140. That's a good thing, right? Then that's where you can think about getting in again, especially if you want to ride the uptrend for this counter in the longer term. And why 110? Look at this right over here. So let me just go ahead to extend this upside rebound target from like 110, maybe 110 to 120. That would be a good level whereby buyers might start to come back again. All right, but if the 120 holds good enough, well, then we might just rebound from the 120. But if the 120 were to break down, we're not too sure, because right now it's just 1 day, so we might actually approach at 120. Hopefully we see some good support base coming in from there again, but you probably need to hold a few days. But if not, if that breaks down, then that's where we can hit to 110. All right, and 110, look at this, as I mentioned, 110 is where the 100 days moving average is as well. 100 days moving average is the red line right here. You can see it kind of like sloping up right now, and it kind of like provides a bit of a dynamic support right here, which is where the horizontal support level is as well. So that's where we can see a bit of a buyers coming back, and that's where the longer term uptrend can still be intact above the $1.10 level. Alright, so this is UMS right here. Short term, yes, the fact that we broke that 130, there might be some short-term weakness, but in the longer term, I think it still looks okay as long as you hold above that 110 level and above these two, longer-term moving average line, which is the 100 days moving average red line and the 200 days moving average line, the blue line, and both of them are pretty much still pointing up for now. Yes guys, so there we have it. We have covered the 3 Singapore technology stock, which is AEM, Frencken and UMS, which I have a lot of clients asking me about it, whether is it a good time to enter again, or is it good to kind of like take profit and all that, right? So I hope you have taken note of some of the levels for these 3 Singapore technology stocks, and kind of like, if you have kind of like exited, it's good to kind of think about when to kind of get in again, especially if we do see some good bullish price action, or maybe good bullish candlestick coming in near some of those good support levels that I talk about. That's where we might see a potential rebound, right, from some of these levels, right? So I hope you like this video. If you have not yet subscribed to this YouTube channel, be sure to smash the subscribe button, or and of course give me a like as well, right? It will definitely help out the YouTube channel, right? So thank you so much for watching. Joey here. Take care.